Hi, this is Randy Finney with Right Side of the Chart, and this is an early session update for Monday, July 21st, 2025. It is 10:11 a.m. Eastern Time as I'm starting the video. Here's what I'll do in this one. I'll show you a quick short-term trading strategy, on the Qs, followed by what I'd like to do as we approach peak earnings season. I usually do this every quarter and go over some of the charts and kind of make a call. Call it a fool's errand if you want, but I'd like to make a call as to the direction certain stocks, key stocks are going to go post earnings. And what I'm referring to is always not the initial knee-jerk reaction if they report, and most tech stocks report after the close. And so it's not the initial report. There's three phases, really, I always say to earnings. The initial report, computers faster than humans can try to process the initial release of the data. Obviously, they can parse reading that a lot faster. Then the algos fire off, knee-jerk reactions in either direction, and of course, there's humans trading as well. Then you have the conference call that can certainly reverse any big pop or drop, depending on what they say there, any guidance they give, any more visibility. And then finally, you have what I call when the dust settles, and that is in the coming days. So those three components, like I said, don't read too much into the initial pop or drop on an earnings release. What really matters is where the stock goes from there in the coming days to weeks. So these calls are usually in the following days to, let's say, week or two, where the stock's going to go which direction. All right, so before I do that, because this is timely, let me share a short-term trading strategy I've used for years. This is QQQ, and down below you see two indicators. We could probably park the PPO right now. Let's just do that for the sake of the video, but you can also watch the PPO crossovers. And it's a simple one. You can see these two purple lines I have here. This is the RSI. For those of you not familiar, the RSI, the relative strength indicator, is it's my preferred metric. There's other ones to determine how overbought or oversold a stock is on any given time frame. Now, this is a short-term trading strategy. This is a 5-minute chart. This is a time frame that the trades typically are measured in hours to maybe a few days. And you can see down here, the default is on all charting platforms, they give you a 70 level as the overbought reading, considered overbought for many stocks, and 30 is oversold. I take those numbers and kind of throw them out the window. They're useless in most cases on certain stocks, especially volatile things, and think of not just stocks, think of natural gas, think of the tech heavy Qs. So I always, on any stock, any index, any time frame, I adjust my lines to what really constitutes overbought or oversold, at least where it's actionable. Why I say that is, sure, sometimes you hit in an uptrend, you hit the 30 level and the buyers step in. Sometimes you hit the 70 level and the sellers step in, right? However, if you try to short or exit your longs on an uptrend on the tags of the 70 level, quite often you're either going to lose money on that short or you're going to leave a lot of profits on the table on your longs. Ditto for going long at the 30 level. So again, my lines are here. This isn't something that I just came up with today. You see the pop-up box tells you I've created these lines on the 5-minute chart. And the other thing to this, guys, is over time, a year, 2 years from now, as I'm covering this, I may have slightly different levels over different market conditions. Even on QQQ, it may evolve where maybe 90 or 87 or 82 or 81 is the extreme level. But you can see here I haven't touched or modified. It would show if I moved that line since back on November of 2024. And here, the same thing on my level, which is 20. So my levels, again, are 85 and 20 for overbought, oversold. I'm just going to show you real quick. And it's a simple strategy. When you hit the extreme oversold reading, I'm just going to measure out and tell you the gains. And if you held to the next one, this is where you reverse and go short, or you go short. And right now we're there. So I'm just going to start the video and tell you at this very moment, 565, this strategy, that's it. It's an objective short pullback. Minimum profit targets are usually 1%. You can align it with support. Right there is a nice support level. The rest of this video, I'm going to go into the fact we are heading into peak earnings right now. So keep that in mind. One of these little, quick short-term trades, if it develops and morphs into sell signals on the longer, much more significant time frames, i.e. the 60-minute charts or daily charts or even the weekly charts, then that can turn into a longer term swing or trend short sell signal. All right, so right now, that's it. Minimum target right there, and this would probably happen today or tomorrow. That's a 1% pullback to 560. Just cover hair above that 560 level would be a minimum pullback target. If you're a futures trader, that's my preference. I like to use this on QQQ. It's clean. I don't have to tell you how much money it's going to put in your pocket every just a single contract of NQ. Make 1%. This is active trading. It's a big part of my, where I make money day in, day out. Not lately. I've been quiet lately. I'm just highlighting this trade up because it just appeared and I just shorted the Qs for this. I've already had a core swing short position. I started a week ago today, right before I left town, last Thursday before last. Thursday before last. And but that's a small position waiting to get some signals data on. Again, I'm going to go over those charts in a second, longer term charts. This is short-term stuff, short-term pullback trade right there. And I can mark this chart up if you're interested, give you other levels. There's a nice support level. And just remember, earnings are coming. So it's this week in earnings, especially by Thursday afternoon, Thursday after the close. And so you might want to keep your positions light, especially that's where day trading comes in. The beauty of day trading is day trading by definition doesn't entail any overnight risk. You don't have to worry about earnings because you open a position and it's closed out by the end of the day. All right, so let's go over the numbers real quick. There's this is as far back as I can scroll. I can't go any farther, so I'm going to hit that one. If you bought that kiss of the my 20 level on the RSI and held it right there, you made, if you waited till you get the overbought reading, you made 2.65%. The next signal was right here, and if you took that short when you kissed the overbought level of 85, you made that 1% I'm talking about. You bought right here, or you covered right there because you hit that level. So that's the key too. If you're going to hold a position, if you want to ride it to the next overbought or oversold reading, then that's where you're going to cover instead of the any horizontal support levels or trend line support or anything like that. Next signal was right there, fire to buy on the pullback to the 20 level, and it told you to hold there. You made 2%. Then you turned around, you got the first signal there. It stayed persistently overbought, no reason to stop out. It was only a 0.4% drawdown. So even if you shorted the initial signal, you got right about under your 1% pullback target right there. Right there was your, I'm sorry, this was the next oversold. That one, 0.5% drawdown. Oh yeah, and I use on this kind of strategy, a 2-to-1 is a nice RR. You can easily risk. You can even do a 1-to-1 because the success rate's so high. Normally I don't go down to much below a 2-to-1 RR unless there's a very high probability trading strategy like this one. So there's the overbought reading right there. Says sell longs, close longs, or get short. And then there's your pullback to the oversold reading there, 0.82. Close. Again, you can use a 0.8. They're average about 1%. Most of these are about 1%. There was the next over. Oh, and then you could have bounced it there and made your quick about, that was about a 0.5% up. There's a period where we were also sideways. So there's a couple here. Again, you never got overbought. You would have you had some buy signals. You never really would have had your stop exceeded. You could have added or taken a single position or held on there. And then finally on this last one, you can see again, no overbought readings, just oversold. And then boom, spiked up. So from that last one there, you had about a 1.61. Told you to exit. You see where my crosshairs are. Again, follow the crosshairs down, overbought. Turn around, exit longs, go short, and down to right there I'm going to go. That's right on the oversold, and that is a drop of 1.08%. You got it. So, and then long here, you're long on that, overbought, and I'm sorry, oversold, And that takes us to where we're at right now as I do this video. This is the first overbought reading, KISS of 85, that I've had since, or the 5-minute charts I had on this, using that strategy. 85.05 is the number exactly. And that's it. So it's the first one there. So it's a fade the rally kind of thing. And again, remember, we have earnings tonight. So let's get into that. Let's talk about what's reporting. This is the daily chart of QQQ. No change in the technical posture. We're inching up with the divergence still very much intact on the NASDAQ 100. And I'm going to show you the big earners, big reports this week. Okay, this is the earnings calendar. Remember, this is available under on the top menu right side of the chart. Go to resources, and then down under that on the right hand side, tools of the trade, and you'll see the earnings calendar right next to the economic calendar. So I won't go over each and every one. There's too many. They typically sort these by importance, if you will, in the market. We have one of the, a decent size, not one of the mega semis, but a semiconductor NXPI reporting tonight. So we're going to start there. And again, the game I play is take a look at the chart. I either have no opinion, bearish, bullish, or no opinion, or sometimes kind of maybe a not so strong bullish or not so strong bearish. What I can tell you definitively, and that's so I go off technicals on this. So obviously there's no way to, you can sit here and guess all day long. The analysts already have the expectation, the earnings. There's a whisper number and the actual consensus, and so that is what that is. You can get those numbers anywhere. They're just dime a dozen. Yahoo Finance or any of the million other sources. Even earnings.com that I just showed you is going to show you the estimate. And this is TA 101 divergent high there. Then you had a nice bearish rising wedge pattern. You had a breakdown. Then earnings came right after, and it just continued that downtrend that was already telegraphed in advance by the technicals. Things came full circle back here. You had a divergent low. There was earnings. Again, you can see a lot of these lines, if you look at it, created back in November 2024, long before that rally happened. And that divergent low there was already in place before the earnings. You can see I labeled that divergent low back in at this point in time, first on January 6th, right here, somewhere in there. And we went down right into earnings. And again, it was telegraphed by the technicals. I don't know if I covered this one or not. Can't remember. This isn't one of the biggest semis. And you had a pop of a 28% a matter of just weeks there. So again, nothing is guaranteed. I always say that. That's the one thing I promise you. There are no guarantees in investing, trading. I speak not in possibilities, but probabilities. So the probability was you'd have a correction after that divergent high. You'd have a rally here. And then that was it. It was a nice almost 30% gain. Then the Trump dump came, or the liquidation day and all that. And now here we are, guys, full circle. Let's just wrap it up here. There's negative divergence, textbook bearish rising wedge pattern. I do not have a position. I don't care to right now. I'm going to wait and see how some of the bigger earnings evolve here. All I have is right now a day trade position on the NQs and a starter swing position from a week ago, last Thursday before last. This one right here, it's a breakdown back test textbook right there. So if there weren't any earnings in a vacuum, I would say, well, right now this is an objective, and it is an objective short. But remember, when earnings come, it's the one time technicals can be overridden. If something big happens, this thing could pop right on up through there. It is always a crapshoot, a gamble, especially taking a position right in front of earnings. But again, I'm playing the game. You take the trade if you like it. More often than not, you can go back, watch videos for years. More often than not, about well over 500 on these calls. And again, what I do is if the chart's not clear, I ignore it. So, there's good and bad in this chart like others. It recently took back the 200-day moving averages, so it's above the 200s. It briefly took them back there, but there's where it lost the 200s and it was in a downtrend sense. So again, mixed bag. If it does pop post earnings, you can see I have a very nice resistance zone right there that will most likely cap any advance. And so that's it. These are old lines. If you're interested in any of these, some of these charts I haven't marked up in a while. I've had these trend lines here for quite a bit. This one's back in when did I create that? Oh, last week I guess, 7/16. But that's the setup on NXPI. Let's move on. There's plenty more to cover. Okay, I'm gonna skip ahead. If you want any of these, an opinion, let me know. For example, like KO, we recently traded Pepsi. Here's Coke. KO, obviously, big close competitor, the biggest competitor. This is one I don't have an opinion. I wouldn't buy or short the stock with your money. There may be a little divergent high there, but this is not my kind of chart, so I'm not going to make a call. I have no idea where this one goes after earnings. It's clearly in an uptrend, and if you give it the benefit of the doubt, you're in a bull trend right now, so you'd have to say flip a coin, you're probably going to go up. But again, I have zero opinion on that. I just wanted to tell you that that's what I go through these. If I skip one that may be a market mover, I'll try to address all the market movers. I don't have already looked at Lockheed Martin, not much of an opinion. SAP, well, we'll talk on that one. That one, it's pretty big stock. All right, SAP. You can see here you can see my lines. I don't have the the letters written, but that's a divergent low. There was even a downtrend line there that gave you a wedge, and there was your breakout that came right after earnings. So this line was here back from that at that time. You can see created back on November 1st, 2022. So I already had the divergence forming. I drew it out right about there, and you can see it broke out and right after earnings. The little E means earnings. This is the primary, not the primary, but probably the most significant uptrend line right here. This one broke down, kind of recovered, got back down below it. I'm not crazy about that action. All I can tell you definitively, some big divergences building, and you do have a minor trend line right there. Again, not one that I'm going to play, but if I had to take a guess, not crazy on the posture of the indicators. I'm going to have to say down only because you do have the divergence, but again, not one. I don't have a high degree of confidence. If it does pull back, the 200-day moving averages, like a lot of tech stocks, are just massive support for the stock. You can see that. Very simple strategy, buy pullbacks to the 200, and if it takes out the 200s on a solid intraday, or especially a solid daily close break and close below there, then that's bearish and that's a sell signal. You can go back as long as you want. Let's just do that. There's the last time we took out the 200s right there, and from that point the stock fell 42%. And then it said buy it when you bottomed out with positive divergences right there, and it may have been long-term support. I don't know. All right, let's go to the next one. Trying to get to the big tech stocks here. Again, some that could be trading opportunities. All right, here's the big. This is what I want to get to. Let's just get to Wednesday and then Thursday, and we'll wrap up. Tesla. I don't have much of an opinion on Tesla. I wish I did. Most recently, as highlighted, we put in that most recent divergent high, and it had a healthy correction. We had as you can see there, showed you back at the time, we had this bearish rising wedge. We broke down from the breakdown point. The stock fell 22, almost 23%. But right now, it hit recently uptrend line support. You've got a clean uptrend line off that big divergent low back there, and it's in an uptrend without any divergences. PPO was just recently cracked below the zero line. That tends to delineate bull and bear trends. Look at that 9 EMA, the white line, which is the last of the two to cross. So this one, I don't have an opinion. I'm not going to bet this one. But it has the potential to move the market, and they report Wednesday. So that's another common theme of this video is expect volatility this week. Next one, okay, Alphabet. Both share classes, so I would like to look at the Class A, GOGL. GOOGL. And what you have on this one, to me, technicals are pretty clear. You've got this most recent divergent high. You're wedging up here. You can see we didn't have a divergent low at the April lows, but we went long. We covered all shorts. At least I did personally. Post that on the site all shorts covered, full long position. And that was on April 6th when everything else bottomed. So, you don't always bottom and top with divergences, but when you get them, they're usually indicative of a trend change coming. I'm just highlighting the last 3 previous divergent highs and showing you right now that we have the first one since this one. The last time we had a divergent high, the stock fell from there at about 32%. Now, should it pop post earnings? I know this is a busy chart, but I'm going to show you a very key trend line. This yellow trend line, it comes off the January 2023 lows. That was when all the big tech stocks bottomed right in the beginning of January 2023. It was my favorite trade. Long Apple and Amazon were my 2 top picks, and overweight on the NQs because we had positive, aka bullish divergence on the NASDAQ 100 and so many stocks at key support. And so that's a very significant trend line, not just because that's when it was an inflection point for the Qs, the NASDAQ 100, but you have a lot of clean reactions on that level, and you broke it, back tested there. So if I had to guess, and that's what I'm doing right now, post earnings, maybe an after hours pop or in the next session that day, remember they report after the close, I would love to see a back test of that trend line followed by a rejection. And especially if it can keep that divergence intact. It's stretching the upper limits of it, especially on the PPO or the RSI down here, but you still have it there on the PPO. But either way, now anything much more than that, a solid green close, especially a couple green closes back above that trend line, hey, that's nothing but bullish, at least for the near term. And then the stock's going to go up. It's going to take this divergence that we had in place there. I can tell you if it happens anytime soon, it will be an extension. And when you see long-standing divergence on the daily chart like that, you have to go out to the weekly, and this is what it would look like. So I'm going to just draw it out for you with the little, this is the divergence that's been building on the weekly for a while. And again, as I said, it's not as if these smaller divergences, it's not as if they didn't pan out. We had a divergent high there. Again, a lot of disappearing lines on my PPO lately right there, so I'll re-add it. So that was a divergent high. That was a big drop of about, I think it's the one I just covered, 38. No, that was about a 50% drop off the 2022 highs, off that divergent high, that small, this right here. This one, the divergence right there. And then we went up. So that was a corrective wave within. There's your primary secular bull market uptrend line. We corrected back to that trend line. That was one reason for going long and strong in the beginning of 2023. A lot of stocks, as I just said a minute ago, especially the big tech stocks, all at massive, very significant support with positive divergences on many of them. Gave us this uptrend there. And it's extended. The divergence from that point has grown. And I'm going to take that arrow across and just show you, because I'll be talking about it. If this stock pops and takes out that high, it will simply be an extension of the existing divergence. Now, the stock just keeps going to the moon. Eventually, that divergence could be taken out. And then we have a different thing going on. But that's what we've had now for months. And I keep talking about on these long-term charts. And there's an example there where, divergence builds, and then finally the correction sets in. It doesn't look like much when you use a log scaling chart, but that was a 35% drop. The stock got cut in a third there, got cut in half there. And so that's it. So that's the outlook for that. So basically, again, to reiterate, I see minimal upside to that trend line there. And then I also highlighted recently for you this potential. That's what the question marks mean. It says left shoulder, head, right shoulder, gives you a potential head and shoulders pattern, but you'd have to reverse soon and start doing so on volume, increased volume, and form that right shoulder. So if that develops and we come down to the neckline, then I remove the question marks because then you have that pattern. This is just, I'm anticipating or recognizing what could morph into or mature into a head and shoulders pattern, but you don't have that right shoulder yet. All right, so we'll see where that one goes. A couple more and we'll wrap this video up. Try to keep it short. Yeah, let's go to Thursday morning. American Airlines, BlackRock. All right, and then Intel. Okay, Intel last of the semis, and for a while now, that's been the one semi I've been persistently longer term bullish on. I've highlighted several. We had several trades, and we hit targets there. We've been buying it here again. That's long term support. So of the lot, this is still my favorite. I wouldn't I wouldn't buy Nvidia with your money right now, but I would buy Intel with my own money. This one is a better. I'm going to wait till earnings is out of the way. I've traded this one and given you the trade ideas several times in the last couple of years, just bouncing off. Again, this is the long-term support level I'm talking about. We've had numerous trading ops here. And as I mentioned back then, the first time we took it, we only had divergence on the RSI. Now we have divergence, or we did, on both the RSI and the PPO down there. And again, that's the weekly chart. On the daily, you recently took out the downtrend line, which is bullish. So again, if I was a betting man, this one I would say goes up following earnings. And I haven't updated this chart in a while, but that's a constructive technical posture. All right, so that's enough. The rest of them will be the following week, and I'll do next week. I'll cover the ones that report next week. For now, like I said, not a lot out there that I'm seeing that with nice risk reward profiles as far as new swing trade ideas. We're in peak earnings season, so I'm still keeping things light. That means light on the post, light on the trade ideas, light on my own personal trading. And this is just a quick, if you want to take a shot at that overbought reading, go for that 1% pullback, get out, and then see what happens when NXPI reports tonight. Or, sometimes if you want to, any trade you take long or short, another strategy is just set a stop. If it starts to pan out, move your stops down to entry so you lose nothing, and you can let it ride for a little bit more than that. I just can't right now. The charts are, near term. It's just not a lot there. We need to see some kind of evidence of reversal on the daily chart. And this is QQQ daily. It's just blah. There's just nothing to this chart. It's just slow grinding higher. The long-term momentum indicators continue to roll over because although we're going up less. My volume indicators, low volume indicators are flashing warning signs. Short interest, I think it comes out 2 more days, the most recent release. But I'm already looking at short interest on many of these key stocks at record lows. So I still believe all the ingredients are there for a potential almost crash-like scenario because there's so much hot air in the market, and a lot of the risk indicators are saying that there's extreme complacency, and the low volume is what does that. When you blow out all the shorts and you get a pullback in a normal market, when you have normal amount of short interest, those shorts are taking profits and they're covering on the pullbacks. But when the shorts are exited and you have record low short interest, that's what sets the stage for those sudden reversals that are pretty swift. So if there's going to be a catalyst, obviously we know POTUS, his next tweet or whatever you call it on his Truth Social platform is, who knows what that is. You can't trade around those. But the most likely culprits for any big moves in the market right now, up or down, obviously are going to be earnings, and I just went over the big ones this week. All right, so we'll wrap it up here. If you have any questions, you want an opinion on anything, imagine most of you are just, it's summer doldrums. Again, can't squeeze water from a rock or blood from a stone. So the best idea I gave you today, the only two I gave you, a pullback on natural gas to that first price target, which was the lowest of the pullback objective levels I gave you. So our objective reentry there, if you took profits last week, which was prudent because the pullback was likely, and then the QQQ short-term trade idea I just gave you. There's the 60-minute chart of UNG. I'm sorry, I gave you the futures today. There was that divergent low, there was a breakout, T2 hit, but again, I always say best to align UNG targets with those on natural gas. Natural gas is the real thing. That's what I trade personally because I like futures for various reasons. And remember, UNG is tracking. They don't buy actual natural gas or hold it. They use derivatives, they use the futures, but they have expenses and fees. So again, if you don't trade futures, it's moot. This is your only other game in town right here. But this is basically a pullback to that trend line there, and you've got some nice support, and you can buy it with a stop wherever, depends on your entry price. Everybody's different. There was that uptrend line that was taken out when T2 was hit. So anywho, that's it. Those are still the targets. All right, I'll wrap it up here. This has been Randy Finney with the Right Side of the Chart. Have a great day.